Hello, traders and investors. Steve Gans here, and welcome to the Market Outlook for June 29, 2025. As I go through the Market Outlook, I'm also going to share a concept trade with you that ties into the current market conditions, including a link to a program I use called OptionStrat. And you do not have to have an OptionStrat account to click on that link. I'll put it in the description below. So again, look for that later in the video. Also, if you like this type of content, please give me a thumbs up, a like, and subscribe as well. At the end, I'm also going to share with you a link to another video that is what I call my options cheat sheet video. It's basically a pretty short video and a downloadable PDF that helps a newer options trader navigate the markets to help them decide what might be the right type of position at any given time. Basically, options have an edge to them that just buying long stock or shorting stock doesn't have. If you haven't traded options before, you won't fully comprehend this. But that's where the edge comes in, is understanding in a lower volatility market, there are certain trades that will have a higher edge associated with them. In a higher volatility market, there's a different set of trades that might have a higher edge associated with them. And the newer options trader needs to understand the difference and when and where and how to look at those different trades. So again, you'll see that a little bit later on here in today's update. So let's get into this week's market outlook. As you might imagine, I've turned bullish here because we can see that we have, in fact, broken out to all new highs here. If we look at this support resistance line, we can see that our old highs right here, we are popping above those in the SPX. And of course, the SPY is going to be the exact same chart pattern. It's just 1/10 the size. Now, another key factor that we have to take into account here is the amount of volume that pop happened on. So pretty significant volume on that up day. Those are both very strong signals that we're entering another bullish mode. Of course, any bull run or any market can be derailed by news. But if we're looking at just the market technicals right now, this is telling me we're definitely in a bullish mode. Now, that said, the fact that we're in a bullish mode, we are also at the very top of the Bollinger Band. That's this red line there. So we're pushing against the top of the Bollinger Band, and our relative strength index is around 70. That high RSI tells us that there's a little bit of an overbought market condition. Doesn't mean it can't continue overbought, but right now there may be a little bit of a sideways chop or a little bit of backing and filling, possibly a little bit of a pullback, but nothing significant at this point based on, again, the market technicals, which is this very bullish breakout that happened and the very high volume that it happened on. Of course, SPY is going to look exactly the same. Now let's look at volatility for the SPY, for the SPX. So if we look at volatility, we see volatility is essentially at all-time recent lows, meaning there's not really any fear in the market specifically on SPY or SPX. Traders are not buying insurance at this point. They are not buying puts because they don't expect any big down move in our markets. The fear just simply isn't there right now. We are in what I'd call a greed on mode and a fear off mode. So that is bullish as well. Now, if we take a look at the Qs, one of the things you'll notice about the Qs, and this was a clue that we were probably going higher in the SPX, the Qs actually broke out to an all-new high the middle of last week. And then we ran from there, ran higher and higher, also on some elevated volume, especially on Friday. So the Qs are certainly in bullish territory or bullish mode right now as well. If we look at volatility on the Qs, equally low, pretty much at all-time lows right now, or recent all-time lows, I guess I should say. So, and close to all-time lows. So the volatility is not there. Again, there is not a fear in the market when it comes to the Qs. Now let's look at the Russell Of course, the Russell has continued to be the weaker index here. If we draw a straight line across here, we did bobble in this area, but broke out. Now, this could be considered a chart pattern that is called a cup and handle. You have a big cup here, then this could be considered the handle area. And when you get a breakout on a cup and handle, that is also a bullish sort of move. Now, what's a little bit different here with Russell is we can see that we actually had a little bit of what I would call a down day. In other words, on a candle, the IWM opened higher than it sold off throughout the day, and it closed lower than where it opened. So that's why this little candle there is red, and that's why this volume is red. Now, it was significantly higher volume, and we can't technically call this a down day, but it wasn't as robust of an up day as the Qs and the SPY were. So the IWM is still in a little bit of questionable territory, but also leaning toward the bullish side. But again, this particular line right here, this green line, is going to be a major kind of battleground, support and resistance, because that line has been fought over a number of times here in the past. And finally broke through it here to the downside, rallied back up, tried to break through here with some force, didn't, sold off, came back, rallied up, and now we're right in that same general area. All that said, when you have the other two indexes breaking to all new highs, the other two main indexes of SPX or SPY, and then, of course, the Qs, they're going to probably drag the IWM higher with it. So if we take a look at all of that, what might be a concept or paper trade? I am not a financial advisor. I'm not advising anyone to invest their own money here, but I am advising people to learn how to trade options, learn how to consider what particular trade to possibly use and what market conditions. So our market conditions here are: 1, we're bullish. 2, volatility is very low. So where does that lead us? Well, in the overall scheme of things, that leads me to consider buying options, because if volatility is low, that means that that extra premium is going to be lower, which means I'm going to lean a little more toward buying than I am toward selling. So what trade might I consider? Well, I modeled up a trade here in SPY. And this particular trade is a simple bull call spread. So nothing overly fancy here. And basically, this particular trade, I'm going out about 20 days or so on this trade. This trade is making an assumption that our market is either going to continue higher, or if it pulls back, it's not going to pull back much. It's not going to pull back probably below that 610 point. Now, my break even on this is down here in the 608 range or so. So that's the trade that I would consider personally looking at, particularly as a paper trade. Again, I'm only recommending paper trades that you can learn from. It has a 62% chance of profit. Anything above 608 at expiration is going to make money. The max profit on this is $129. Max loss, if the market were to tank and I did not adjust anywhere along the way, and when this trade finally expired on the 18th, if I was somewhere down here below that 805 range, I would suffer max loss. Now, any options trader that learns more about options trading is going to learn how to adjust this trade if that happens. There are specific things that an options trader can do to possibly mitigate that downside loss, or reconfigure this trade in different ways to encompass whatever the new market conditions are. But this would be a starting point for this trade, again, largely with the assumption that I am bullish focused right now. I am expecting our market to move up, or at a bare minimum, probably stay in a general range. And then as this decays out from under me, we can see that profitability will come into this trade to the point where if in fact at expiration, I am above this particular point, that's 608, I will be profitable in this trade. So I'm going to go ahead, I'm going to save this trade, and I'm going to save it as a weekend update. And for today's date, which is June 29, 2025. And so I am going to share this link. I'll copy this link. I'm going to share it in the description below. You do not have to have an OptionStrat account to open this. If you click on the link, it's going to open it up and it's going to look just like it looks here. And what you'll be able to do then is you'll be able to come in and play with this. Maybe you have a different assumption. Maybe you don't want to take that much risk in the trade. So you can look at, well, gee, what if I tighten this up a little bit? What if I only make this a 2-point wide spread instead of the planned or the saved 5-point wide spread? What if I want to add another call spread on top of this to maybe turn it into a condor? Those are all the types of things that you can do with OptionStrat that will help you learn and understand more about how options move. So with that, I'm going to wrap up the weekend update here again for June 29th, 2025. I am going to make one last suggestion to you though. Check out this next video because that video is going to show you how I use a simple PDF file that I designed to help me decide what types of trades might have an edge based on certain market conditions. There's a short video there, a free PDF you can download if you're interested in knowing more about that. And I thank you all for stopping by. Take care. Okay, now for those of you in the alert service, let's just take a quick look at a couple things here. So as you know, I have been testing live now. I had been testing in paper for quite some time, a trade that I'm calling the Flyagonal. I've started trading it in the class and the alert service as well. Overall, me personally, I have at this stage had 25 wins in a row, and then I finally had a loser on Friday. So our market ran up almost 250 points from when I put that trade on. And while I adjusted to attempt to chase or follow that trade as it went higher, I just couldn't stay in front of it. It was moving so fast and in such a bullish way. And I knew somewhere along the line, this trade was going to have some losers. No trade is perfect. But if we look at the overall P&L of this trade, since I started this about 6 weeks ago, it's generated about $6,000 in profit. Now, the maximum risk in each one of these trades, it varies a little bit, but it's in that 1,500 to 2,500 range. So pretty darn good return. And then the P&L diagram looks like this. So a very nice lower left to upper right P&L diagram. Of course, that last trade put a little bit of a kink in that. But again, that's going to happen. I'm perfectly fine if this trade holds up with these general statistics associated with it. Now, on Thursday, I opened up another Flyagonal. So this one is currently up $195. Looking very good. I also have this wheel trade in PayPal that I opened in the alert service, looking very good. And then I have this longer term trade with Lucid where I purchased leaps that don't expire for more than a year. I've been in this trade 125 days. It is frustrating me. I know I've said this a number of times. I apologize. There's conflicting views that keep coming out on this. I see some views that are pretty bearish in nature where some things are not going to do so well. And then some other news comes out where they just signed a pretty significant deal for fleet cars in the UK. And they just got top awards for something else. So again, it is really a battleground, keeps going back and forth. I am going to make a decision on it here. I'm not even going to give a time frame at this point. Just know that it is something that I do continue to watch and monitor and evaluate. So this week, again, in bullish mode, I will likely be looking to open at least one new Flyagonals. I will be opening those probably with a little more upside room to them, given the bullishness that we're currently looking at. So this is where I apply my technical analysis into the trade to attempt to open a trade that might be a little more flexible to the upside, given that we have this bullish mode that we're currently in, assuming, of course, that continues on Monday, Tuesday, etc. So that's going to be the game plan here for this week. Thanks, everyone, for stopping by. If you would like to know more about the alert service itself, I'm going to have a little bit of a short introduction video right after I close out here, so feel free to watch that if that might be of interest to you.
So what leveled up my trading skills fast? It wasn't just a course. It was sitting beside real traders, watching them work live. And now I want to give you that same edge. This is options trading for income, not day trading. I only take action 2 to 3 times per week, almost always in the last 90 minutes of the markets. So it's designed to fit your schedule. With the SJG Trades alert service, every trade alert is a video breakdown where I walk you through the exact logic behind each entry, adjustment, and exit. And you'll also get direct access to me for any questions. I have 3 to 5 trades running at any time, and every trade is designed to be scaled. So whether you're trading a $5,000 account or a 7-figure portfolio, you're covered. You'll also unlock a huge video library of hundreds of closed trades to learn from at your own pace, all with corresponding videos. Just go to the URL on the screen or scan the QR code on the screen to see more. You get full access, can cancel at any time, all for less than your daily cup of coffee. It's time to start learning faster.
As a final reminder, be sure to check out my PDF and video about when to get into what options trade. I call it my cheat sheet. So just be sure to check that out. Take care.